Good morning, everybody. Welcome back to another live stream. Happy Monday and welcome back. Hope you're well rested from the weekend. Gosh, I had a crazy weekend. Also, let me just double check that my my sound is okay. I have to do this every time I'm at home, just in case. I think we should sound okay, look okay. I think we're good to go. I always have to do that because for some reason my computer at home wants to like change microphones, which defaults to like my webcam mic, so it sounds really bad. So sometimes I've done this in the past where I've streamed for like 10 minutes only to realize I sound like a tinfoil, I don't know, tin cup. I don't know. Good to see you guys here. Thank you for being here. Yeah, so this past weekend we had a bit of a like family and friends gathering, a little bit of a holiday party at our house. And my family came over. We made great food. Well, actually, so my family, I know I don't look it, but my family is actually Lebanese. Like my dad's side is Lebanese. I'm not very Lebanese at this point, but we still eat the food. And oh my gosh, we had catering. We basically paid a authentic chef to make Lebanese food, and then we brought it to the party, and oh my goodness, it was delicious. And we've still got some left over. Oh man, I'm excited. I love when it comes to holiday time, hosting a party, you got to be careful with it though, because there's too much good food around you. But anyways, with that said, we have a little bit of a rebound in markets this morning. What you have here is you have Nasdaq up 0.72%, S&P 500 is up 0.5%. The Russell is up 0.9% here this morning. Small caps leading the charge. I actually think that, and I've made fun of myself on a stream last week about how for the last 2 years I've said I think the Russell 2000 is going to hit it, that it's going to have an outperformance year. And for 2 years I've been wrong, but I still think, and maybe I was just early to this idea, which might as well be wrong, but I think that there is upside in 2026 for the Russell. The Fed cutting interest rates and perhaps some reacceleration of some aspects of the economy could be really good. If you saw, like, for example, if you saw housing pick up, if you saw hiring pick up, if you saw, healthcare names and regional banks have a bit of a bounce back, that's a pretty good recipe for some Russell outperformance. We know that part of the reason I would argue that you've had such outperformance from the big giants is because they are less rate sensitive than other parts of the economy. What I mean by that is that when you look at like Apple, right? Or you look at Nvidia, or you look at Google, the thing about these companies, why they are so resilient in recent years, I would argue, is because we've been going through an environment in which interest rates went up a lot post-pandemic from where they were. And companies that were used to cheap money, they got hit hard, like the Russell, right? They have more borrowing that they need to do. Whereas these companies are super cash heavy. And so they have cash to sit on. Well, if interest rates are going to come down, I think that the perk there is that these types of companies, which were sort of a almost safe haven to an extent, I think you could actually have some favoritism for companies that could get some reprieve, some upside from borrowing rates coming back down. And I've said that for a while, so I've been early to that idea. But I still think the Russell has some outperformance. I also like the Russell on a technical basis. Like, check this out. The Russell, very nice breakthrough these highs, right? So big pop to the upside, price pulled back, but hasn't even really retested this area. Still, overall, strength seems to be on the side of the bulls for the time being. Russell on the weekly time frame looks really good. You have a nice breakthrough prior highs and a nice potential, what I think is a longer term breakout taking place on the Russell. Like, take a look at the monthly time frame. We pretty much double topped here, went back lower during the April sell-off stuff, and then now we're back with vengeance. And to me, it looks like you have more upside. So we'll see. I like the Russell going into next year, so long as interest rate cuts continue. to come down the pipeline and the economy doesn't fall apart. If the economy falls apart, then Russell gets hit hard. And there are signs that the economy is weakening, but I also think that there are some aspects of the economy that are still very strong. The thing is, though, sometimes people get it confused. The stock market is not the economy. In fact, actually, the Russell, in some ways, is a bit more accurate of the economy than the S&P 500 and the Nasdaq. Why? Because the Nasdaq and S&P 500 are so tech heavy. They're so concentrated on the big names, which have, done significantly better than other aspects of the market. I would argue that the Russell is a bit more of an accurate indication of the economy than the S&P 500. What that would tell you is that the Russell's been pretty sideways for some time, right? Zoom out here. You're looking at a daily time frame. The Russell's pretty much gone sideways over the last, multiple years. Like, take a look at this. So if you had bought the Russell in 2021 near these highs, you're only up 5%. That feels a little bit more indicative of what the stock market average, the economy has been in back and forth mode for a while. Whereas it doesn't really feel very accurate if you look at the Nasdaq, which would tell you, if you were gauging the economy, like, the economy must be on fire. It's doing amazing. And it is for a cohort or subsection of the economy. The big AI tech names, they are on fire. But the average company, not so much. And I think that's a little bit more reflected in the Russell. So I think that the average stock may actually have a bit of a chance to see some strength going into next year. Here's the RSP. This is the equal weight ETF. This is the S&P 500, but instead of allocating a huge chunk to the Mag 7, this equally weights it across all the different stocks within the S&P 500. I like this one going into next year. I think it has potential, and it's showing some relative strength here recently. If we go RSP/SPY, check this out. So the RSP, the equal weight versus the market cap weight, has been getting beaten down for a while. Again, that shows you that concentration. It shows you that people or the market has favored the big, huge companies over the average company. So concentration is very, very heavy. We're seeing some signs that maybe this thing is wanting to break structure and start to move higher. This RSP versus SPY. So I'm watching for that. I think that could be an interesting story next year if you continue to see interest rate cuts. Continue to come down the pipeline, the economy hold up. I think the RSP could actually take a turn and see some upside. Precious metals here this morning, guys. Oh my goodness. Silver is just such a machine. Up 3% again. Feels like this thing is up almost every day. It's been just a monster in 2025. Silver, this is crazy. I bought physical silver in 2023, and I doubled what I bought it for. Actually, more than doubled at this point, which is an insane thing to happen. When I bought it, I mean, I'd still sit and I'm going to hold on to it for long term. It's not something I'm like trading physical silver, but it's doubled in value. And what the true precious metals people would say is it didn't double in value. It stayed the same. It's just that the dollar, the valuation of fiat currency globally has been destructed. I'm pretty sure most people are very aware of that. You go to the grocery store 5 years ago, it's a different place than it is today. So anyways, back on topic here with precious metals, I still think there is more upside. I said this last year around this time. Last year around this time, gold and silver had run up all year in 2024. They looked really strong. And, we stayed bullish on those into 2025. And sure enough, another incredible year. But look at it on a monthly time frame. And I've always kind of pointed this out with precious metals. Precious metals, in a weird way, they typically make all their moves in like a giant cluster of years. But this candle looks ridiculous, right? You're like, this thing has got to reverse course next year. But I'm telling you, that's exactly, sorry, my cats are fighting each other. But I'm telling you, like last year, that's exactly what it looked like too. Like, look at this. So if I go rewind this, I'm going to start a new replay, go here, right? Is this 2020? No, that's 2023. So watch this. So we have this kind of, what am I doing wrong? Hold on. I want to go next bar forward. Maybe it doesn't work right on the 12-month chart. Anyways, you get my point. right there, it looked like an extreme reading. There we go. So it looked like, oh my gosh, this thing is just unbelievably overbought. And sure enough, 2025 ended up being another monster candle year for gold and silver. My point is never say, oh, this market can't keep going, right? That's a dangerous, dangerous thinking. Now, could gold have a reset year, a pullback year where we go sideways or lower? Sure, sure. But to say it has to come down because it's gone up is a really dangerous line of thinking. Nothing ever has to happen in markets, right? Just like the trend doesn't have to continue. It doesn't have to reverse. It doesn't have to continue. The point is, whenever you make an idea, right? Whatever it is, I think that the euro is going to move higher. I think that bonds are going to move lower. I think that gold is going to move higher. Whatever it is, right? If you are unwilling to acknowledge what you will do if you are wrong, it's only a matter of time before the market makes you its next victim. If you fail to prepare for what could go wrong, it's going to happen. Your worst case scenario in trading, guess what? You trade long enough, it's guaranteed to happen. Your worst case scenario, as in like I enter a trade and it goes immediately against me, it doesn't come back for months, right? If you're trading without a stop, you could sit and draw down for months and months and months. If your size is too big, you blow up. So anyways, I'll go through really quick just some of my own positions and some things that I'm watching on. People seem to really like when I did this in my Sunday video. So we'll do a little bit of rapid fire chart setups if you guys would like to. All I ask is if you could hit the thumbs up button for me on the stream, subscribe if you're just tuning in, and let's do some charts. So first I'll start with some of my current positions. I'm still long the Nasdaq. So far we seem to be holding support very nicely around this 25,200. I think we look constructive. From an intraday perspective, we probably look like we have some potential willingness to try and fill that Friday move that moved lower, right? Price seems to want to make that move. On a higher time frame basis, when we take a look at the daily time frame, again, I made this point in my Friday video and my Sunday video. You're going to see people say, oh, that's a lower high. But the way I look at lower highs, lower lows, etc., is you can only call this a lower high if you're studying the trend, which is the whole idea between higher lows, higher highs. If you're trying to study trend, right? Trend would say you wait for a lower low to confirm that this is in fact a lower high. So if you want to call this a lower high, I think you have to wait for a lower low. Again, you might say, well, then I already missed the lower high. Well, yes, this is trend following. Trend following means you're lagging the market. People don't like to acknowledge it that way, but that is what trend following is. Trend following means you lag the market. You don't lead the market, you lag it. And in a crazy way, by lagging the market, you can actually do quite well. Like, it sounds insane, but by following what the market's doing rather than trying to predict what the market's going to do next, I've found way more success doing that. So anyways, if this thing rolls over and breaks this 38.2% retracement, starts breaking through structure, then I'm just going to take profits on the move. And if we fail to hold support here, then that truly would be, okay, we have downside, right? So that would tell me we have a lower low. This is a lower high. We start getting our trend lines out. But I think it's a little too early to jump to that conclusion, right? Because you have a lot of forces here. End of year is a very solid seasonal time for markets. Is that a guarantee? Of course not. There never is. It could drop out of the skies right now if something happens, like something external, like Taiwan, China, some big groundbreaking news could break us out of that mold. But I think for the most part, you're looking at an end of year rally, most likely, in my personal opinion, not just based on my opinion, based on historical seasonality. This is typically a strong period of time for the market into year's end. I think that is something we don't want to necessarily fight personally. Take a look at the S&P 500 averaging last 10 years about a 1.5% gain in December. So I just don't have a huge willingness to try and fight that. However, like I said, you start breaking structure to the downside, especially if you break that 24,000 level, I have to fold, right? I'm a good poker player, know when to hold them, know when to fold them, right? You have to, in my personal view, if you break this critical area of support where we found major buying pressure, If we don't see that come into play, if we come back to that area, then I have to get completely cautious on this market. But for now, I think that this is sort of just another checkpoint. We had a healthy pullback on Friday. Until we show signs that we're breaking that formation, to me, this is still potential for another, for bull continuation. So anyways, that is the Nasdaq trade. Let's also talk gold, because I am long gold still in this position. Stop loss has been trimmed a little bit tighter here. I've got my stop just below this structure point here. Really, I don't want to see price come down below this general area where we were just at. If that happens, then it's time for me to take profits on the move. Again, another situation where I'm locked in on, I have stop locked in profit, so I can't lose money on this trade, which is, a nice spot to be in. But the question is, can we get the move back to the high? I think gold, there's a big question now on everyone's mind, whether you are a bull or a bear, is as you retest or come close to retesting all-time highs, what's the reaction from the bulls? Do you have enough strength from the bulls to actually get head and shoulders above this prior all-time high and lead us into 2026 with strength? That's the question. I'm looking for that. If I get that kind of move, what I will do is continue to say, okay, trend is bullish, looking to trail stops below any sort of higher low structure. Okay. So what you'll see here, a pattern, if you watch my videos and my streams long enough, you'll see that I react to price. I do not predict price. So you don't hear me saying, I think we are going to move higher, so I'm buying it right here. And I know it's going to happen, right? I don't know that, right? I think path of least resistance is for gold to continue its trend, but I don't know that. And so my plan is to, if we get any sort of breakout higher low, then I'm going to trail stops. If we don't and we roll back over, close out. And this is what I think through on every single trade. Every single position that I share or discuss inside of the VIP Discord, every trade, I acknowledge, here's what I will do if I'm wrong with this position. If you can't do that, you're setting yourself up for failure, because if you don't have a plan of what you're going to do when you're wrong, because you're going to be wrong, every single person in this room, every single person is wrong about their idea. Your best idea, your A++++ setup can go terribly wrong. So you have to start acknowledging, what am I going to do when I'm wrong, right? So I'm still long gold, trailing stops on it. I think it has upside. I'm long GLD, by the way. That is the ETF that I'm trading. So what we can see here is gold. I haven't updated my chart here very much, but same kind of concept. I've got to move my stop. I don't know why my stop isn't moved on this account. Hold on. So I'm just going to do that really quick. So we have support here. Same concept as, of course, the gold spot price. So there we go. We just updated that. And we'll see, again, as long as we can continue to make that push back towards all-time highs, I'll continue to stay in the move. If we break support, then I'm out of the trade. But so far, looking okay. So, and then I have one other position open. No, I have two other positions. I have a long euro pound position that I closed out for partials. I took partial profits on this one. And then, of course, I've got the second runner that I do think could make that squeeze back higher. Euro pound looks good on EdgeFinder, or at least it did. I'm not sure if it still has that reading. Euro pound, yeah, it does. So +7 score here for euro pound. So that looks good. We are already long euro pound, and basically going to look to take partials on that. Euro Aussie is the next one. So I took a short position Euro Aussie last week. This is a small one for me, but I still like the setup. Off the daily time frame, you have resistance here. Sorry, my cat is crying. Give me 1 second. I'm going to open the door for him. Come on, buddy. There you go. Okay. Yep. So euro pound, 38.2% retracement looks interesting. 1.7660. Current levels, I think we have downside for this one. Let's see if it still has. It no longer has its Euro Aussie bearish position on the EdgeFinder. Just going to hold the trade. If it stops me out, it stops me out. It's a small risk on the account. Let's see. Now that we've gone through the positions that I'm in, let's now go through what we're looking at here for new setups. Dick said he won't be streaming. Where did I say that, Josh? We have plans to stream all the way through end of year outside of Christmas. I still trade Decembers. Okay, so Euro Yen. Let's start going through some setups. By the way, what I'm using here, if you're new to the show, the top setups is essentially a screener that scans not just technical price, but also it gives us an output based on technical analysis, sentiment analysis, like the commitment of traders data, crowd sentiment. We look at economic growth statistics like GDP, PMIs, retail sales, inflation statistics, CPI, PPI, PCE, interest rates, jobs markets, the employment change and unemployment rate. So we have a pretty broad sweep across a large list of different economic, sentiment, and technical indicators to help build a bias. Okay. So with that said, let's go through some charts. And I know there's some questions in the chat, but I'm going to try and do some speed running here. So I'm not going to answer them at this time. I apologize for that. But this allows me to flip through charts quicker, which I think is probably more suitable for the average viewer who's not asking a question. I apologize if you asked a question. I'm not ignoring you. I'm just trying to keep the show running because we got a lot of stuff to cover. Okay, so let's look. Euro Yen. Euro Yen is going to be a very bullish setup on EdgeFinder. So let's do it. Euro Yen here. I like this one if we can get a deeper pullback. It's been a bit stretched here to the upside. I haven't really been able to catch a pullback on this one. So I would love to see if we could get a little bit of a discount on Euro Yen here. Something like this, the 38.2% retracement looks really attractive. Still a ways away. That's a daily time frame. So that could be, by the end of the week kind of thing, or maybe not at all. So I do like Euro Yen to the upside. Gold, we already covered. I am long gold. As I mentioned, stops are trailed. Updating that inside of the VIP group from here. S&P 500, let's take a quick look. So if we take a look, S&P looks solid here out the gate this morning, rebounding a little bit from the Friday down day. You've got support here right around the 6,800. Let's go ahead and mark that as support because that level is clearly being reacted to by the bulls around 6,800, 6,810, something like that. S&P 500. If you are watching this one from a breakout trader's perspective, watch this prior all-time high. If you get above that, you again may have that sort of Santa Claus rally around the corner. So might be interesting to keep an eye on that one. I do like the S&P 500 on the long side, though I am already long NAS, and the correlation between these two is pretty high. So I'm not going to stack the same trade that I already have open. So I'm already long NAS, but I like S&P as well. Euro dollar to the upside here. So if I take a look, a little bit of dollar weakness out the gate here today. So euro dollar, I have a really obvious setup that I like on euro dollar if we can get this pullback here to the 38.2% retracement. Really interesting level here. You've broken out of consolidation looking left. This is probably my favorite currency pair setup right now is euro dollar longs on a retest of this area. Dollar is finally showing some weakness. Look like we're rolling over. We've been strong for months, and finally sellers seem to be taking a little bit of a turn to the downside. Double top here, breaking support. So yeah, we look good for some potential dollar weakness as rate cuts seem to be gearing up into year's end, or I should say into next year. Let's take a look at silver. We already talked about gold, but silver, I don't really have anything I can say in terms of like, I'm going to, take a trade this week unless you were to get a pretty sharp pullback down to this 50% retracement. As long as overall macro conditions were generally similar, and a move back to like 57 or the 50% retracement, that starts to look attractive to me for some upside, long side continuation. I like silver quite a bit at this level, but would need to wait for pullbacks. I can't do anything up here. Moving on to the next idea. So if I take a look at Russell, I mentioned at the start of today's show that I really like the Russell on the long side. Although, again, haven't had a really good pullback. I was kind of watching this area here for a possible pretty aggressive entry, not necessarily in position size, but rather in a shallow pullback. I think that's a pretty aggressive entry, but I still like it and I might watch it. I want to be long the Russell in 2026 with a stop, as always, right? Whenever I have an idea, right? Sometimes people get this mistake. They're like, Nick, you were so bullish on this and it failed, or you were so bearish on this and it failed. It's like, yes, but I use a stop loss for a reason. It's because I acknowledge very quickly when I'm wrong in markets. I'm wrong all the time in markets. Nobody's right all the time. And the difference is if you acknowledge it, stop out quickly, keep your winners big and your losers small, you can do just fine. So at least that's my style. Some people like to do base hits, right? Where they take small wins all the time. In terms of momentum trading, I'm much more a fan of like trying to catch the big winner every once in a while. It's not for everyone, but it works for me. I've done it for years. Again, that's my personal approach, not for everybody. Aussie Yen. Let's take a look at the old Aussie Yen. This one is sort of a carry trade legend. Higher interest rate offered by Australia compared to the low interest rate offered by Japanese yen. I like this one from a pullback if you get the 61.8% retracement. Look, I like the yen pairs long, but I think there could be a little bit of yen strength in between. So I'm watching for a pullback on some of these. I like Aussie yen quite a bit. It tops the list. And yeah, again, for those who have questions in the chat, I'm not ignoring you. I am just, I am rushing through or not rushing, but I'm trying to get through a big list of stuff here today. And I think that, I don't know, can I ask you guys really quick some feedback? I'm going to let you answer this while I continue. Give me a 1 in the chat if you want this speed. Like if you want me to flip through charts like this, give me a 1. If you want me to slow down and spend much more time just sort of analyzing stuff, give me a 2. There's not a right or wrong answer, but I'm experimenting because I just want to make the show as useful as possible. And honestly, the flipping through charts quickly mode is definitely more like what I do when the camera's off. Like that's like when I'm just going through charts, this is what it looks like. Anyways, without the, obviously the presentation speak as well. I'm just doing it in my head. Anyways, let's keep going. I do like the Dow Jones also. Okay. We're getting lots of 1s. You guys got it. You're the bosses. You're the bosses. I just work here. Dow Jones, breaking through highs, looks really good. I like this at the 38.2% retracement. Let's mark that level here. The Dow Jones actually showing some relative strength recently. Looks quite good. Aussie dollar, we take a look at this one, AUD, USD. Let's take a look here. The Australian dollar, I got to take it back. This one might have my favorite setup over Euro dollar, but they're pretty close. I like both of these to the long side. Pull back to the 66.20 level, looks really good. We're getting close. Couple down days on AU, and we might have an entry there for me on this setup. Again, I should also say it's contingent upon what EdgeFinder says. If the Aussie dollar drops hard and it loses its bullish score, then no more trade, right? It depends what EdgeFinder says. I use both price and I use EdgeFinder to build a confirmation. Let's take a look at DAX. So I'm looking at the German DAX. Let's see, German DAX. Consolidation, what I'm looking for here is a break above, right? You mean that kind of move, this kind of move. We might have something to do there, but not currently. Euro pound, I'm already long the setup. I already mentioned that earlier. If you want to see that, rewind the stream a little bit. AUD, NZD. Let's see what this one's looking like. This one still looks overall bullish. You had a nice reaction from this 1.14 level. If it continues to pull back into that region, longer term uptrend still seems intact. I actually have a short position on my kind of counter trend account in Forex, but we'll see. I think that there is upside in terms of short-term momentum, so I still like the upside for that one. Bitcoin. Let's talk about the old Bitcoin. Bitcoin has been a troublesome animal this year. It's like they can't keep this one contained at all. What I mean by that is that, you know, it's broken correlation in some ways to some of the big US indices. So anyways, usually it moves with the Nasdaq. Recently it's moved like a Nasdaq call option, right? Where it's like losing value over time. Anyways, if you get this kind of move, there may be something on here on Bitcoin, but I would need to see like, you know, just some serious strength come into this market because I think Bitcoin is just a momentum machine, both directions. If it's going up and it keeps going up and up and up, it can just go on forever. But same thing to the downside. There's nothing to say. I mean, we know very well the history of Bitcoin, right? Everyone knows at this point. The thing drops 70, 80% multiple times in its history. And that's all happened in only a predominant long-term bull market. We have not had a major recession since Bitcoin became public or kind of since inception. Understand that if you get a major recession, I don't know what happens to Bitcoin. It could go to 1,000, right? I genuinely don't know. It's never lived in a hard environment. It's only lived in a low interest rate, no recession environment. I think you have to be careful with that. So again, I'm not a bear, but I want to acknowledge that if you get a recession, it's unprecedented for Bitcoin. It could drop so hard. You know, again, all those 70, if we dropped 70% in a predominantly hospitable market environment the last 10, 15 years, I know it sounds crazy, but look at 2008, look at 2000, look at, you know, the 70s, the 80s, where you had major inflation and massive recessions. Bitcoin's never lived in one of those. We don't know how it reacts. Nick, take a breath between pairs, saying by saying what else? Chris's tactic. That's so true. That is Chris's tactic. Thank you very much for the donation, Bulent. I appreciate that, my friend. Yeah. So, anyways, overall, I do like Bitcoin in terms of when it's moving to the upside, when we have momentum. But I have to be careful with it when it's moving to the side too. So that is the thought process. Got a couple more charts. Already talked about Nasdaq. Kiwi dollar is very similar to the Australian dollar. Just pull this one up. So here's my NZD USD. There it is. So NZD USD looking for this kind of move if we can break through this, or a pullback into support here. So kind of in no man's land right now. Platinum, I'm going to skip. Swiss yen, I'm going to skip. I've got to move on to my, we're going to throw the show over to Ivan here in just a second. So going to finish out with dollar Swiss franc to the bearish side. This is one that I avoid shorting because the swaps are so expensive. But in terms of a technical basis for the dollar, I think it does matter to cover. If you can break through 79, this kind of move could signal a leg lower in this currency pair. Nick, did you short gold? No. I am pretty bullish on gold right now. I think fundamentals lead technicals, and I also think that fundamentals still suggest upside as they have for some months here. Gold looks good to the upside. The trend is still your friend here to the upside until it's not, right? Until you start breaking structure and then it's no longer your friend. Right now, I think we're headed back to fresh new all-time highs. I've said this for years. All-time highs equal usually, there's a little asterisk here, usually, not always, bullish, okay? So if you have something breaking to all-time highs, there's usually a reason, and there's usually a pile of orders coming in to chase that thing. So trying to fight all-time highs is probably one of the most beginner mistakes out there. You see something hitting all-time highs, you're like, oh, it's all-time highs. It's going to come back down. And it's like all-time highs usually signal more all-time highs. Usually, again, keyword usually. Nothing is certain. But generally speaking, I still think there's upside for gold personally. With that said, real quick before I end the stream on my side, well, I'm not into the stream, but we're going to send it over to Ivan, who's going to be going through some more charts and setups that he's watching. Before I do that, let me just remind you, we're doing our holiday sale right now. EdgeFinder is 45% off right now during the holiday discounts that we're doing. If you don't have a copy and you want to do what I just did, whether I'm live streaming or not, or if I take a 3-week vacation, get yourself a copy of EdgeFinder. It's the lowest price that we do all year. We extended our Black Friday and Cyber Monday deal just to the end of the year for our holiday sale, just to give people more time who needed it to set that up. Also, we also offer pay plans. This is a thing that we've been doing recently because a lot of people are like, hey, I can't afford the full price, but could I split it up into 2 or 3? And we do offer that. So if you need that option, simply click the link in the chat right now to speak directly to a member of our support staff here at A1 Trading. We'll get you set up with a plan that works for you so that you can lock in the low prices, get some software that helps you take your trading to the next level by monitoring technicals, market sentiment, economic growth, inflation statistics, and jobs market. If you've wanted to implement fundamental analysis into your trading, but don't have a PhD in macroeconomics, this is a great place to start learning and implementing them on an automated basis. EdgeFinder is the tool you may have been looking for. So get yourself a copy during a holiday sale by clicking that link that's in the chat or heading over to a1trading.com. Don't go anywhere. The stream is not ending. We are now throwing it over to our next show host, Ivan FX, who is going to be talking trade setups and sharing some ideas with you all. Stay tuned. He's up just after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
So as the yen man, and I saw one of you, at least one of many here, mentioned, bring on Ivan, and I think I am the star of the show for yen. Maybe I don't know. We have some. I wouldn't say updates, but as we all know, there is a Bank of Japan meeting on Friday, and you're like thinking, Ivan, what should happen on Friday? Uh, Ivan the End Man Beetle. Yeah, very good. Yeah. Ivan always has the best openers. Oh, thank you. Fair. Thank you. I'll go back to my Norwegian humbleness and say he was okay. No. So what I went through as Nick was talking about his absolutely fantastic setups, which I agree about every single one of them. Is that what generally happens when yen is hiking interest rate? Is yen just going to strengthen? Is it going to weaken? Like what is in store for us? Now, if we go through the history, there's been three for the past 2024, so 2 years now. There was one 19th of March 2024. There was one 31st of July 2024. And then there was another rate hike from 24th of January 2025. This one, we were still negative and went into positive. And then dollar went, well, if anything, slightly higher. Sorry, dollar yen went higher after that. But then for July 2024, we had a really massive fall. And that was slightly or largely also because dollar was that same time hiking, or when it was coming in with lower inflation, and Japan was going into higher inflation. They were going opposite, so people were taking their profit out of their market, and market tanked about 12% or so. Now, that did not happen again in January 2025. We're not in the same situation, but generally, after some time, it did drop a good, with 1,000, good 1,600 pips. Okay, cool. So that's kind of what has happened. And just down memory lane, is it driven by dollar? Well, not really. Is it driven by yen? Yeah, it is actually driven by yen, or in this case, it's inverted yen. So in this case, it's driven by yen strength. So we had over the morning, we had a bit of a news. Now I've tried to practice. When you practice before you go on YouTube, and you say, okay, this there was a business service this morning. The now I can find the word. The Tankin survey. I think that's maybe easy because it was a different word earlier. Which is basically a survey where the large manufacturers' confidence, and it showed that it was better than expected. And that's again talking about yen positive mark. Japan TIARI industry index was up 0.9 a month over month, versus expected 0.2. Fair enough. And then that was the survey. And then Tanken, the Bank of Japan member, also lifted Japan by saying, hey, we think that we are still committed to hiking on Friday. So what does that mean for us? At the end of the day, what yen is about to do, we haven't really done yet. There is not a problem, but we had a weekly planning meeting yesterday where I discussed, what about if dollar falls this week? It is a perfect storm, wouldn't it? Well, overnight, yen has, not allegedly, but has fallen, what's it, 90 pips or so overnight, which is okay, good. That is all right. I was short yen for the same idea about over here. I got out 50% here, and then I got into break even. And I didn't short it again yesterday. Why didn't I short again yesterday? Other than being absolutely exhausted, if you watched the recording, I wasn't awake for the open. So that is a way of trading. When you are in a situation there where you were not fit for trading for whatever the reason. If you lost somebody, if your work is giving grief, whatever the emotion, whatever it is, I'm never going to look at your trading history and see all the trades you never took. I'm only going to look at the history where you took a trade. So, for example, if you were to sell dollar yen at the current price, I'll be like, why do you short so low, sir? And then you would say, okay, it's because this just went away from me. And as Nick also just discussed with you, is we only going to sell, or we would like to sell at major levels, and we don't run after market that has, for example, just made a higher high and think, well, it should go higher. We don't. Well, I necessarily predict price, but I want price to come to a certain level, and then I can react. So with the current level, it doesn't really apply to me. So what is my application as a trader? How do I want these things to move? Is that I want this to have a pullback, but about tomorrow morning London Open, or at least end of New York's session, meaning current price, I'm not interested in shorting this one. But if it comes back higher, that would be great. That is if I believe that this hike of this hike of yen interest rate is going to lead to more hikes. Now, we had New Zealand the other week, and New Zealand cut interest rates, but New Zealand got really strong because it was expected for them to start hiking maybe again next year. And if Japan now, which also, as they say, it pains them quite dearly to be hiking, now your likeliness and what you're going to look for in their statement or in their communication in their in the press conference is what is likely to be happening next. If they are likely to not not hike going forward, this was the one and only, and then you have to make a judgment what is likely to happen then next, because the current prime minister of Japan is a very pro stimulus of the economy that weakens the yen. They have already prepared another QE package for about 43 trillion yen. If they're going to do it again, are they going to continue their bond purchases, what they're currently doing at about 3 or 4 trillion yen a month? Okay, that is all QE. That all weakens the yen. And if you at that point also think, okay, I believe that since that is happening and we're not going to have any more rate hikes, then I believe yen is going to weaken. And all of a sudden, you can then take your idea and says, okay, I think we are going to be yen weak going forward. You go to for me, I would go to seasonality, and then I was okay. When do we have strength? Do we have strength at the moment? Well, we have some slight strength coming into the end of the year. Or if I come over in February/March, that would also be a better position than right now. As I also mentioned yesterday, I said, and then of course we have to go to setups. Where is it? Top setups. And what is it? Its value at the moment? Not there. Cool. Category. It's currently negative 0.1. Okay, fair enough. Let me just wait. And as I also want to do is to go through the heat map for yen. Do we currently have grounds for saying that this should continue weakening? We have 3% inflation. That's really high. We have negative 0.6 growth. Okay, that's really weak. Okay, we have manufacturing at 48.7. That's really weak. But then at the same time, we have services at 53. So you have a very mixed picture. That's also why it's going into Japan central bank meeting this week, monetary policy meeting, this week. you are allowed to have both at the same time. Both views. If you say you're bullish, if I say I'm bearish, it doesn't, for me in this current situation, you can say, I think this should happen, or I should the opposite, and I and I think the opposite of what you just said should happen. Now, at the end of the day, what matters, as Nick also mentioned earlier, is your setup. Okay, if the EdgeFinder doesn't say that yens should be high, should be weakening, you have a negative 0.1, dollar is not really strong, then you only have the option to wait. And I think that what I've not seen, what I'm lacking in, not necessarily in this community, but what I'm seeing on a regular basis is the lack of patience and the lack of waiting and the lack of, let's call it, forward thinking and saying, okay, if I am in a position that was a couple of weeks, it's months ago now, but in October, where we had the prime minister coming in, market jumping up, and yen pairs was going higher and higher, I saw people buying into that. And I was like, how, why, where have you done this before? Have you been trading this kind of situation before? And the answer is always no, I don't. I haven't. And what is the reason why? Because we are rising, because yen is weak, because dollar is, this one is rising. So that since the market momentum is going higher, I am then, or the what do you call it? The reaction of our brain becomes, let us buy forward. But what I always say is, what if you get a better price, let's say 2 weeks later? And for that matter, I also want to congratulate Nick on it. If you wait for those pullbacks, for that matter, about New Zealand, about beginning and going into end of November, okay, what, which also says it should go higher from. But how do you prepare? How do you think? And how do you behave when market is falling hard? And for that matter, it's not certain why it's falling. This was the scarcity about AI bubble, but that could happen again. That could happen again tomorrow. That could happen again in January. How are you going to behave in certain situations? Now we have a red candle on Nasdaq. Is that good enough for you? Or if I were to say anything at all, why not 24,300 level? Why is it going to be 2,500, 25, 20? Why is it going to be 25,250? Why can it not be? Why can't it be as low as it possibly can and then go higher? The problem with that is, which has been my problem for December, is you don't get an entry. Okay, you don't get an entry. Bashi, long time no see, Yen Master. I'm happy to be back, or always been here. Hi, Joshua. Yesterday, I came across a beautiful piece of advice. It says that every position you take is saying that you agree or disagree with the current market narrative, not just price. Yeah, I absolutely have 100% agree. ASEAN, you have asked for dollar yen, Aussie yen, sorry, for quite a number of times. Yes, it will be covered. I'm just going to run through what I plan to do, okay? Good. And then some Cycling Club 55 says, why does it feel like the market is ignoring what Powell said about job market being off, but we have benefit tomorrow as well? You think there be more uncertainty? Okay, let's take that for a moment. No, they don't, and I didn't. And for the simple kind of for the simple part is that we don't have the latest job data, as well as Powell and them have in the form that we normally have, but they have, allegedly, it seems like, other surveys that we don't have access to, or they say that their data supports that market hasn't really come down a lot. And they also talk to businesses beyond what we are being, but what we are being told. And as far as I know, that might be the source that they have that allegedly we don't have. And now that's why I'm surprised, because I was bullish on dollar. I thought dollar's going to rise. I thought Powell and them is going to be okay. This is actually quite a hot and a good economy. We have high GDP, we have high CPI, and then he comes in and says, "Well, CPI is actually only 2%, 2.2% or so, very low in the twos." And I was like, "Where did you look at that? How did you know that? Why don't I know that?" Because he said that they took away the impact of tariffs. So the inflation is actually quite low. And then in generally in the economy without the tariffs. And then other parts is that yes, they emphasize on the weak jobs data that we already have. Um so market doesn't necessarily disagree with him, but we also saw at the large range of indicators that we have been given, which are talking about an economy that is generally not falling at all. It is rising and doing quite well for quite some time and being quite resilient. Now, the jobs and the labor market is a subsequent kind of one piece that is weak, but it's generally speaking almost the only piece, at least before that meeting, that we saw as really having some potential to move the Fed. So as I saw the cut, I saw that okay, you can probably justify a cut, but it's a hard cut. It's a hard, difficult cut to make, but actually were very what do you call it? They were very convincing. They were majority and quite a big majority for cutting. So even though it was a small descent, and one was even doing a double. So what the market has been given of information is not what the Fed has been given or provided. So in my view, there was one a difference in data set or an understanding of the same data that we don't have or didn't have as Fed had. So to me, it's at the end of the day, it is what it is. Now, tomorrow we're gonna have the tomorrow we're gonna have the tomorrow we're gonna have the I can't even say it. Tomorrow we're gonna have the job market data. Great. But there's a problem. If there's an October data tomorrow, it's not if there's going to be an October data, which I don't think it is, it's highly not compromised, but highly like it's not full. Second of all, November is just half the month. So some of the data that's November data is only half the month. If they have not been able to magically find data or really work overload to really get a full set data. Now the problem becomes what is the margin of error in that data? Generally speaking, it should be about I think 2 or 3% or so. That's normally what I've seen around those reports. If that is significantly higher margin of error in that data set, then we market might end up saying, okay, it doesn't really matter because the data is not reliable because it wasn't collected for the entirety of a month and it's not a full data set, so that it's skewed and not necessarily, no, I'm not going to use the word compromise, but it's limited and doesn't give the whole picture, so we can't really go off it as 100% reliable, truthful, full picture data set. Then the market might just be giving a smaller reaction. The only thing we do know is January for the December data is going to be a full data set. And from there, we can start thinking, okay, we actually have something to go off. What could happen tomorrow? And that has to be put into your consideration is that the most dovish data parts or the most dovish part of that data set might be released tomorrow. So it might give you a wrong picture, which again will be corrected in January for the December data. But there is a big question for me is how much, and by the way, we haven't seen a big difference in jobless claims after it got restarted again. Sorry, ADP numbers, which would stay the whole time. But again, that doesn't correlate to NFP. But regardless, if there is a large fall in the data set, a big drop in jobs, as Fed said there was, then okay, we're all going to be fine. But if that now says it was actually quite okay job market going through November, then who are we going to trust? Are we going to trust this job data, or are we going to trust Powell? That is left over to you to make that decision. What are you going to base upon? Are you going to base upon the data that is not fully, or are you going to base upon what Powell said? So at the end of the day, at any time as a trader, this probably is a way different statement than I'm sorry for talking too much, but there is you as a trader have to make those analysis and make those judgments, no matter how green, no matter how new, no matter how skilled, no matter what your ability as a trader is. You at any given moment have to make a decision on the data you bring in, on the data you receive, on the data you consume, and how do you put that into your analysis? Do you disregard it? Do you give it high weight? Do you give it low weight? Now you have the EdgeFinder for that, thank God. Now, but then apart from the EdgeFinder, is what does it tell you? What does the Powell speech give you of additional information, given what we already been provided? And for me on Thursday, it was two different things. It was data tells me one thing, Powell tells me the opposite. What am I missing in between? Is that they have valued the labor market to be weaker than expected. They have valued the inflation numbers to be weaker than, at least for me. But also, he said that they are getting closer to a neutral place. And I find that what the market haven't really priced in, that they might be more satisfied than expected, that they're not going to cut as much next year, at least in the current state, because they seem to be getting down to a more neutral rate, meaning then they are going to move their interest rate less. But if tomorrow, which is more than likely, that we're going to see a sharp fall in the labor market, if we see a sharp fall in the labor market tomorrow, then dollar and I'm trying not to swear, and the market then will react quite volatile and sending dollar lower, because then we're going to start pricing in rate cuts next year because the labor market is in free fall or something. Powell always. Now, do I agree with Powell? Do I agree with these Fed members with the data that I have access to? No, I do not. But that's where kind of our disagreement ends, because at the end of the day, they are like our parents. They tell us how we are supposed to read the market, the inflation market, the economy in itself, because at the end of the day, it is what their policy does is what is going to be put into the economy, is generally what's going to dictate how businesses perform, which dictates the currency price and the stock market. So it doesn't really matter what I think what it should do and what they could do, because that doesn't change price, that doesn't change cost of finance, that doesn't change the outlook of the economy. It's just a simple opinion. So what I wanted to talk about today was euro dollar going higher, and I was looking to buy, but okay, it didn't come down to my level, and I guess it is what it is then. Thank you very much, sir. Pound, not so interested, but yeah. So Aussie dollar, still not low enough for me. Wanted to come a bit lower. I wanted to buy New Zealand dollar, but again, me being me and doing me things, I haven't got an entry on it. Therefore, you haven't seen me trade it. So I pray that we're going to get a pullback tomorrow so I can get an entry on it. And if not, it's okay. It's okay. It's okay. Doesn't really bother me. Dollar Swiss, dollar CAD, dollar yen, all bearish to me, but I don't have good options because we are already off, gotten away from central pivots and resistances. So I'm looking for a buy in Aussie, looking for buy in euro, looking for pound in New Zealand against the dollar. Hasn't really come to fruition for me. Yen pairs to me is likely to fall, but there's going to be a lot of volatility going forward. I also mentioned yesterday that going in from this week or next week, if we see a lot of lack of volatility, like we just go into a range now, that's also very likeliness. Or if we fall to more because of the weak labor market, then going into lack of volatility. So if you go back to December, I don't know, just took 1 year then, December 23rd or so. Yeah, from about 2024 was from about 19th of December, we really didn't move until end of the year. Just being mindful if that happens, that you don't expect a market to move because now it's holiday season, it's holiday mode, volatility leaves the building and goes out of town and is having a good time instead. Okay, so for me, I am dollar bearish, hopefully at least. I waiting for it. I didn't get it, and I on the other side of this, I am the one that does the mentorship meetings. I do one-to-ones. If you want a free one-to-one with me, now is the time. I believe that between now and New Year's is the time to review your trades and get knowledge in so that you're ready for 1st January, because that's when volatility is supposed to start picking up again. So if that's something you're interested in, I offer that. And you can go over to my YouTube channel if you want to be part of that. And until next time I see you, Merry Christmas and boom, peace out.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Weeble. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Weeble is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Good morning, everyone. Good evening, good afternoon, wherever you are watching this. It's good to be back here. We have a pretty jam-packed week, actually, for this week here. They usually say that December is pretty slow as far as volatility goes, but as far as, Forex goes, we do have lots of things coming out. We have, lots of CPIs. We have retail sales in the US. We have Bank of England. I believe that's tomorrow or Wednesday. And we also have Bank of Japan, which is like the big front and center thing, which that one can go ahead and give a shake up as far as the markets goes, because of that, that carry trade, that rate divergence is going to narrow across the board here. So yeah, hey everyone, how you doing, Eisen? So yeah, there's a lot to talk about, a lot to be mindful of. As far as active positions goes, I only have one position open. It's a dollar Swiss long position, contrarian type of situation. Just collecting some positive swap here. That's one of the beauties about Forex, is that you can kind of do that. And so the idea here with the dollar Swiss, we're in this range here. So between this 8,100 and the 7,900 level. We did have the Federal Reserve say that we have one cut going into next year, 2026. But obviously that can change, right? If the job market continues to worsen, which is a big risk, one of the risks that I have to be mindful of, given that I'm essentially long dollar right now, and we have NFP tomorrow. If the labor market does weaken, that is probable cause for the Fed to continue their rate cuts, and perhaps we add more to the table for 2026, and so that can bring this dollar Swiss lower here. But for now, this 78, like, below this level here, this horizontal level that I have marked up, that'll be a hard stop for me if we continue lower. And that'll be a sign of more rate cuts getting priced and things like that. Then of course I ditched the idea, but for now that's the situation at hand. And this trade right here is a longer term thing. This is a very longer term point of view. So as far as active positions, I don't have any right now, just because we are pretty much extended in the opportunities that I would like to take. So I know that I was watching Nick earlier. He was saying he was looking for pullbacks in the euro dollar. I was actually in euro dollar longs and Aussie dollar longs from right here. And then I kind of, took profit as we hit this level here that, we were hitting the resistance. So I got out prematurely. Of course, if I would have hold on longer, I would have, got more, but that's trading. You don't know what's going to happen next. So I was in the Aussie dollar. I caught this big rip. It was like, more than 10 days of just, green candles here. So I got out right there. And now we're just waiting for pullbacks. Euro dollar showing some pretty strong relative strength. But ideally, like short-term active plays, I would do Aussie dollar if I can get a more of a pullback there. The last rate cut that the RBA did was a hawkish one, so they did actually articulate that they wanted to potentially hike the rates. So that'll be like the top of the list as far as active trades. But for now, I'm just long dollar Swiss contrarian, collecting some positive swaps. It has the healthiest positive swap out of all of the currency pairs. So if I were to go to the carry trade, give me one sec. It's over here at the bottom. Oh, well, no, actually, no, because of the recent Fed rate cut, but still has a very healthy positive swap. 3.75 is the rate divergence, and also kind of going along with my longer term positioning on this pair. The Swiss franc is a very strong currency pair, and Swiss National Bank has voiced that they're actually looking to devalue that. It hurts their export and imports, and Swiss is a very small economy, so they do rely heavily on that. And so before they have intervened, not at this level, but more like these deeper levels. So it does happen. That the thing with interventions is that you don't know when it's going to happen. So it could work out in my favor. I could be late or early to it. So that's another thing that's kind of like on the back of my mind when it comes to the Swissy. Hello, Sluggy. How you doing? Hey, Alan. Elite view you got there. Oh, thanks, man. Yeah, this Chicago was freaking cold, man. It is cold. It was my birthday was over the weekend, and I had family over, and we're all from Texas. So we're not used to it. So I'm adapting to it, but it's definitely not something I'm used to. And it felt like -11. I think that was the number. The feels like the wind chills. So super, super cold, man. You have to be careful, but that's my view as far as longer term is long dollar. Short term, I do want to participate, but we do have a pretty loaded calendar this week. If I just go to here, we have UK CPI tomorrow. We have PMIs up on that side of the world. U.S. unemployment rate would be a big one as well, right? If we do get a deterioration in the U.S. labor market, that could actually work against my current dollar Swiss position. But I could potentially, go contrarian and do like a quick play, like a swing trade, maybe like holding for a day to 3 days, 5 days on a Aussie dollar, euro dollar type of thing. We have non-farm payrolls as well. We also have more CPI as far as for the UK. So yeah, it's a really, really loaded week. We have Bank of England as well. They're expected to cut about 90% from my understanding, but they're struggling with elevated inflation and also some weakening growth. So last week they did have some growth contract a little bit, and that's a stagflation environment. So that's pretty tough for them to navigate. So that's why I also think, as far as upside capped, I think that the pound does have a little bit of a cap when it comes to upside. -11 is crazy. Yeah, man, it's freaking crazy. As far as yields go, we did have the long end of the curve stay elevated. It's trading lower today. I do trade, in line with yield. So 10-year yield trading lower. So we did actually kind of retrace that full move before the Fed. So before the Fed, we were trading up in this 4.2 level. And then, kind of anticipating that hawkish cut that the market was looking at. We got that dovish tone, so we traded lower, and then we fully retraced it, and now we're just kind of back right here. So nothing too crazy with yields. We're kind of just staying there. If we do get like a very convincing trade lower, then perhaps the dollar will see more of a slide. At the moment, the dollar is around this 50 handle. I mean, not 50 handle, 50% retracement level. If we continue lower to that's 61.8, that'll be another line of defense. If we break below that, then we're probably just trading back to this lower end of the channel here. Let's see, equities. This is an important level in my opinion, one that I had drawn out, this 25,000 level on the Nasdaq. Should have been, I know it was a Broadcom last Friday, I believe, or Thursday, that was kind of leading the fall here in the Nasdaq particularly. I don't know what's causing it today though. I didn't really see anything. S&P 500, same thing. That 6,700 level is gonna be a line of defense for the bulls. But I mean, I do think that we're gonna get a kind of like an end of year rally type of situation. Perhaps not a significant fall right off the rip in December, going into December, but we'll see how it all plays out. So dollar CAD too, a little bit of an underdog situation. Canadian economy has been struggling with their labor market particularly, and they're actually doing pretty well now. So CPI today came in flat as well. It was expected to be 2.3, and it came out at 2.2, and 2.2 was where they were at last print. So a flat reading, not bad. So the Canadian dollar did appreciate a little bit. Dollar CAD's lower here on the day. Technical outlook for the dollar CAD, I can't really get a good grip on it. This was a level for me, this like 1.3800, 1.3900 level. Before it was resistance 1, 2, 3, 4, 5 times, turned into support, right? When we had that tariff headlines in the beginning going into like January, it was going to be that Canada, Mexico, China tariff 25% across the board. That really gave dollar CAD a little bit of a lift off here. We've then, retraced back lower. And that was my level. Now we're trading below it. So as far as continued downside goes, that's a possibility, or we can trade back into it. I don't know, to be honest. So don't really have a great read. The only thing I could really do on the dollar CAD would just kind of look left here and look at this, 1, 2, 3 times that we bounced off of it. So that's kind of what I have there. Any thoughts on US oil? It's relentlessly selling. Not really. Let me see what it's doing. Technical. Let me go back to the weekly. I mean, pretty convincing downtrend, I would say. My eye kind of gravitates to like this. So let me see. I'm not actively trading oil as well, so take this with a grain of salt. This is kind of what my eye sees. So if we break below that here, we probably have cause to go ahead and bring lower. This will probably be good for inflation, right? As far as transporting stuff, gas, all that stuff, transportation can bring the cost down for inflation. So that could be a good thing, right? And that could be good for further rate cuts as well. So as long as we see oil somewhat, toward the bottom of here, then that could be good for the inflation outlook. Let's see what yields are doing across the board. Japan, staying elevated still. So we're still, market still seems like that rate hike coming on the 18th is still very probable. So we're going from 0.50 to 0.75. Now I did see something interesting in the Discord. Marco, he did some research on his own time, and he did mention in the chat that last December 2024, the markets were prepping for a rate hike. Markets priced it in, but then they never did that, and they actually did it in January. So I'm curious to see if that pattern is going to continue this year. The Bank of Japan has kind of said that they're going to be pretty careful when it comes to rate hikes, just because they know the implications of it and how it can cause some disruption in overall markets. So I'm curious to see if that's going to be the case again, because not a lot, but a portion of the economy, like a small portion, It's propped up on carry trades. It's a smart thing to do. Like if, institutions, people with big money, big pockets, they arbitrage. So they, borrow cheap yen and they park that money into higher yielding assets and they collect the spread. Further rate hike in Bank of Japan, that will kind of disrupt that. It'll narrow the rate divergence. So that could definitely trickle into markets. And in my opinion, Bitcoin, that's what happened with Bitcoin. This like last leg of the sell off, like it is returning lower a little bit. Bitcoin did have a sell off when that kind of headlines did hit the tape. And so I'm curious to see how sensitive Bitcoin is. If we do get that rate hike, I'm curious to see the reaction in Bitcoin. If it has another leg lower sharp, that'll give me a gauge as to how sensitive it is to cheap borrowing costs. And what timeframes do I enter trades? The daily and the weekly. When it comes to like getting a look as to what I want to, the best zones in my opinion are drawn out on the weekly time frame, and then the daily would be my ideal situation. Unless it's like I'll give you an example. If I'm looking to go along Aussie dollar, daily time frame, this is a level of resistance, now turns support potentially, right? We'll see if we retrace here. We did touch it and then bounce back up. So if I am looking to go long Aussie dollar off of the backs of that, their central bank is somewhat hawkish, Fed, the US is dovish, that'll be a good setup for me. I would go down to the daily here. Once we get to this actual level, then I'd go ahead and go down to like the 4 hour, the 1 hour, see what it's like. But I take technicals really with a grain of salt. To me, it's pretty elementary. It's just like I just draw horizontal levels really. Thank you, Robo. I appreciate it. I just draw horizontal levels that are pretty obvious, and I just use that. There's really no because I'm swing trading. I could be somewhat not specific on my entries. I could swallow a couple pips, draw down. It's not really going to be that effective. I just care more about being in line with the macro, and just being in line with the trend. So that's what I would do. So like if I'm looking at Aussie dollar, I'll just do this tool here, and I want to get in here. I don't mind if it goes against me a little bit here. Now, if it breaks this level, starts flushing, then I'll just cut the trade short. But as far as getting here, I'm not gonna be like, well, I can like get in here, or I can just get in here, or like here, or here, or here. Like it's not gonna matter that much. In the grand scheme of things, I'm just looking to catch that upside. And if I can get in and do that, then I'm happy. But yeah, that's kind of my approach. A lot of it too is discretion as well. I think when it comes to trading, like a lot of the things that will make you profitable or not is discretion. Because if you have a manual, somewhat like a checklist style, and I say, if I'm along with macro and I'm gonna get in at this pattern every single time, and there's no discretion involved. It's more of like following that checklist. We can get to this level, and then something can flip, right? We get like super high CPI in the US, right? That's gonna cause the Fed to hold on their rate cuts, right? That kind of a thing will kind of disrupt my trade, right? Higher dollar can cause the Aussie dollar to tumble lower a little bit. So if I don't use that discretion, then and I just go with the the written rules or whatever, then I'll take an unnecessary loss. But that's only you only give that with time and a little bit of experience and just watching things and see how they develop. But yeah, that's pretty much my approach. Bashi was on Friday. Thank you guys. Thank you. Aussie Yen. Yeah, go ahead and look at that. The yen pairs for me, gonna be a little bit tricky. So yeah, this thing's running up. I don't really trade the yen pairs. The only one of the yen pairs that I'll trade is dollar yen. And even that one, I kind of you gotta be careful with that. And the ATR on the yen pair is like 3 figures. ATR is just how much a pair moves in one single day, the average true range. So you really got to be like low position size, wide stops. You got to be able to swallow like these moves, like, you know, this thing right here. If I put it up, this is a weekly time frame, just so you know. But this is a 700 pip move, right? This is just 1 week. It's pretty crazy. So let me go down to the daily time frame on Aussie Yen. I wouldn't know how to approach this, to be honest. So I don't want to guide you in the wrong direction. If we do get that hawkish Bank of Japan and we do actually raise the rate, then we can probably see a pullback. But you also have to factor in that Australia is also pretty hawkish as well. So I don't know how that'll, really impact Aussie Yen. If I go to the top setups page, that's probably what I would reference. Let's see. It's getting a bullish reading, which is good. Right now, Aussie is yielding more than the yen, so that's probably why. But if I go to, let's see, interest rates, projections, toggle Aussie, we'll isolate the two. Yeah, I mean, Aussie will continue to have the higher yield. They're looking, like I said, like they're looking to hike. So you can see the blue bar is Aussie. There, it's kind of progressively getting higher slightly. But the yen is also going to follow suit in that direction as well. So perhaps if that's the case, right, we're going to have an Aussie that's going to be hawkish with the Bank of Japan that's also hawkish. Aussie will obviously be more hawkish than Bank of Japan, or just yielding higher, yielding more. Then on a technical basis, what I would probably do is, let's see if I can help out here. This is what my eye catches. Something like this, it's not like a very beautiful level. So, but maybe a pullback up into here would be okay. But again, we're pretty extended. I don't know how far it's going to go as far as targets go. Excuse me. Potentially something like this. So perhaps we already tagged that, and now we're tracing lower. So that looks somewhat clean to me, I would say. Hit this target, right? If you just look left, hit it, we're tracing lower. If you just look left here as well, perhaps this can be some sort of support. And then you would do something like this. Just trying to, get back to that level. Risk to reward is kind of not the best, right? You're risking 209 to get 234, but maybe if you're patient, you use discretion, like I mentioned earlier, maybe you can wait a little bit lower, see what happens, and then you can kind of better the ratio. But that'll be how I would play the Aussie Yen. Swiss Yen, I'm very interested. Swiss Yen would be a really good trade because of swaps, but you just got to wait for a very obvious technical flip. Melissa, am I looking for any positions on silver and gold? No, so I trade currencies predominantly. So gold extended here. I wouldn't short it. So just because we have, we're getting to the highs, shorting gold is obviously very painful. I think from my understanding, everyone was shorting gold like right here. Once we got to like this level of resistance. I mean, because I was watching it. Excuse me again. 3,500, you short gold, and it just keeps running higher. And I think they did the same as well at 4,000, just because of that psychological level. That idea, like psychological levels are super reactive, and then you just got burnt again. You would have been in deep drawdown just to get back to break even, and depending on your position size, you probably could have got wiped out as well. So for gold, not really something that I would short. As far as long positions, we're at the highs again. I would look for a pullback of some sort. My eye takes me here, something like this, that 4,200. But that's a very shallow pullback as well. So take that with a grain of salt as well. The biggest thing though, I would advise anyone is just be aware of what's driving price. And I know this seems like pretty obvious, but if use tools, whatever you have at your disposal, but use tools to be mindful and aware of the macro picture. That way, you're not going against the grain. You don't want to be swimming against a heavy tide. So, if that tide does show or kind of suggest that gold's going to go higher, then you can be very successful in doing so. Gold is one of those things that trades higher over time as well. So, that's why I'm kind of against going short gold. Now, you asked if I trade gold or silver. I don't trade the metals, but I do trade them indirectly through currencies. So one of my biggest things was like April 2nd, that tariff, the reciprocal tariff. So it was going to be supposedly, I think it was 10% baseline or 20% baseline, and then it was actually lifted to 50% across the board when the president showed that board with the list of all the countries. That caused a big shift into safe havens. So although I don't trade gold, and that was a great monster rip, a lot of money flowed into the Swiss franc and the yen. So I was able to trade those indirectly and still catch the same idea. Although I'm not trading gold, I'm indirectly trading safe haven flows, and that's how I pretty much do it. When it comes to oil, if there's a super obvious lucrative thing in oil, then the Canadian dollar is something that's somewhat correlated to oil. It's not a one-to-one correlation, but it's somewhat. When it comes to risk, right? When there's lots of risk appetite, then I would trade the Aussie dollar or the New Zealand dollar. Those are super risk currencies. And so that's the thing, right? So markets are all intertwined. So if I want to trade the DXY, well, a lot of the DXY basket is the euro dollar. So euro dollar moves a lot with DXY. So if I show you, let's see here. I could actually do this. If I do DXY on the left and euro dollar on the right, and I just delete this just to kind of keep it clean. Take a mental snapshot and you can see how identical they look. If I just do epic pen, see if it's going to work this time, because last time I was recording a video, it didn't work. DXY on the left, you have this happening on DXY, you have this happening on the euro dollar, right? We're pretty much getting to the, we're getting pretty stretched here. We're also getting pretty stretched on the euro dollar as well. So when it comes to trading the DXY, I would do it via the euro dollar. So with currencies, you can do a lot of those things. You can play the same idea through currencies. Biggest market in the world, most liquid, I would say, and that's kind of my bread and butter. You remember that was crazy? Yeah. Is there a potential rate hike for Japan? Then why isn't it reflecting in markets? Some of it's priced in sluggy. So if you look at the 10-year yield for Japan, we're pretty elevated here. So this right here would show you the actual pricing in of something. If you see they don't rate they don't hike the rate on the 18th, then reference this 10-year yield chart, and you would probably see the reaction that would most likely happen is 10-year yields fall a little bit. So when it comes to the pricing in of interest rates, you always want to go off of the yields. So for the dollar, in this case, 10-year yield trading lower, then that means that the dollar trading lower, 10-year yields following suit, then the market's pricing in those rate cuts. Now, what's very interesting about yields is you can also kind of see if market's calling bluff. So if we do see that the Fed is raising or lowering their interest rate, but you still see elevated yields, then the market is not in agreement. They're not aligned in that sense. So that's what I love about yields, is you can kind of get a good idea of that. And when it comes to like the consumer and things like that, I mentioned this as one of my videos. Just because the Federal Reserve lowers their interest rate doesn't mean that the consumer is going to benefit right off the rip. There will have some effects as far as bigger companies goes, but when it comes to mortgages, auto loans, credit cards, all those interest rates that the consumer uses on a day-to-day basis, or they're actively trying to acquire debt, the rates are not going to go down for those things if the yields are still high. So mortgage rates, they don't follow the Fed, they follow the yields. So look at the yields, reference them to kind of see if market's calling bluff or not. I think with Japan, it only reflects if the market thinks the carry trade is at risk. But if it's one hike and nothing after that, they won't care much. Yes, cycling. So I agree with that. You'd watch the yields closely to kind of get a confirmation of that. If you pull up your EdgeFinder, I'm assuming if you have it or not, I'm gonna refresh this page. And I'm gonna isolate dollar and the yen. So I'm gonna put the epic pen on as well. And I think my session's wrapping up here, so I'll this will be my last take. So cycling, to your point, it only reflects the market. The carry trade is at risk. I believe it's somewhat at risk. So this is the EdgeFinder's interest rate projections tool. So you can see the forward guidance, forward anticipation for rate cuts. The yen is in red, so you can see that their bars are slightly coming up here, right, trending higher, and the US is in blue. US is also coming lower as well. So that right divergence is narrowing, and that can have implications, and that can disrupt those carry trades. But yeah, I believe that's it, James. If I can confirm with you, that's the end of the show for today. But yeah, hopefully that helps you a bit cycling as far as that. So I think the market is anticipating somewhat of a higher for long or hiring rates in Japan, and so that's why the markets are somewhat sensitive to this narrative, and it can pretty much disrupt some stuff. But all right, guys, that's it for today. I'll also be on Wednesday and Friday as well. So, you'll see more of me. Definitely join the Telegram channel. It's a free way to learn fundamental analysis. I do my best to pick out the two most imperative to know things for the day. So it's not just two random charts. It's two active charts that are really really have some weight to what's going on in the market. So definitely feel free to join. It's completely free. Just a couple minutes a day. I try to condense them as much as possible. So definitely take advantage of that free resource. But without further ado, have a blessed rest of your day. And like always, trade safely, guys. Bye-bye.
Thank you for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want to get put on the nice list this year? Then make sure you check out the A1 Stock Box. That's all for today, everyone. We'll see you tomorrow. Ho, ho, ho.